Then let me show you my running trade on crash 1000. So this crash 1000. Question: how do I get into this trade? Now you will be looking at this as a counter trend. Is it a counter trend? Yes, and at the same time, no. Alright, depend on how you see it, but obviously this is against the trend of the market. Now if you have watched my previous two videos where I talked about divergence, that should let you know that this trade was basically made based on divergence. And in that video I take my time out to explain that when price is reversing in a divergence, you are not just going to relax in that particular trade entry. What do? You want to make a quick one, so you will just scalp and get out of that market until you have a proper confirmation of a change of trend beginning from a 15-minute time frame. You see now, we'll be having a stability when price goes above this to think of to buy to some extent, but presently we are still in a seller's market. But why am I in this trade? I did this based on divergence. So if you are conversant and if you don't know what divergence is, I recommend you watch our previous two videos so you can see that the price action on our main chart is different from what exactly is happening on our indicator window, and that is the divergence. And in that video I state clearly that for you to consider a valid divergence, there are certain factors you will always put into consideration, right? So what are these factors? I know that the questions on your mind that you want to ask now. So this factor that you put into consideration is your upper Bollinger Band, lower Bollinger Band, middle Bollinger Band. So your effective divergence should happen around the zones of the Bollinger Band, and price should be outside or along the Bollinger Band line. That is to tell us that the sellers have pushed this price to a high level of extent, and there is a tendency that they'll be taking profit. Then price will need to pull back a little before they inject in more sell trade. Alright, and so we decide, instead of just waiting randomly, let's take advantage and take as little as we want before price continues selling to the downside. So when you see this divergence, you need to wait to begin to see bullish momentum. So what do you see? You can see bullish push, bullish push, bullish push. And if you are to use another trend line, you realize that you have a low here. You have that lower high. This structural point is your lower high. So you can see that price successfully break it. And in that video we said once price close above your 20-period moving average, you should know that that is the beginning of an established pullback. So we are expecting that maybe this price will pull back to this zone here, because if you look at this zone, we have imbalance. There's an improper price action here beautifully well. So that zone is on this candlestick. So I am hoping that price will be able to continue this pullback, maybe fill into this imbalance before it will continue selling to the downside. And that is how exactly I come into this trade entry. I believe you have learned something. Don't forget to like, to share and subscribe. And you can also get in touch, enroll or get our video of our mentorship class, very much affordable. So there will be a Telegram username in the description of this video that you can reach out to make your inquiry. You can as well join our Telegram channel. Thank you for watching, and we hope to see you in the subsequent video. Here is a quick one how I made this trade entry, and this is exactly what I'll be sharing with you. So I use this few indicator, my Bollinger Band, the period is 130, deviation is 2.0, shift is 0, you apply to close. If you are conversant with this channel, you will know that this is my favorite indicator, not because I trade indicator strategy, but because this is the system that works for me. And the most important thing is you getting a system that works for you and sticking to that system. So what matters is not about the strategy you trade, but what matters is if the strategy you trade is able to fix your bill. So the second is moving average period 20. So this is what I use basically to do my chart analysis. And then I use my relative strength index, which is my TDI indicator. You can see the period. So you do the screenshot of this, and then you do the setting on your own. Ensure you use the same color so that you will be able to understand everything alongside with the explanation I'll be sharing with you in the video. So if you've done your setting correctly, your chart will be looking exactly like mine. And of course, we are concerned about doing our analysis considering the Bollinger Band and the moving average 20. Now that does not mean we make our entry in isolation. What it means by making entry in isolation is deciding on the trade entry based on indicator alone. We don't do that. So for effective, you need proper understanding of candlestick formation. Now, not just knowing or quoting what the nature of candlestick is, but your ability to understand what each candlestick represents is your edge as far as trading is concerned. Alright, so we know it is not about the color, but about the action that produces the behavior of the candlestick is what matters. So looking at this candlestick, this is a bearish candle. As you can see, we have this series of bearish candlesticks. What this tells us is that there is a bearish momentum. It shows that sellers are in control. So if you are to analyze this candle by candle, this is one candle, second candle, third candle, fourth candle, fifth candle, sixth candle. So for sellers to move price up to 6 hours, it shows that they are fully in charge and there is a bearish momentum. So it will be a wrong trading decision for you to be thinking of buying in this type of price scenario. Alright, and then bearing that in mind, from the candlestick we now use our moving average, our Bollinger Band, as a confirmation. So this Bollinger Band you are seeing here, the middle Bollinger Band, help us to confirm that this is actually a seller's market. And how do we determine a seller's market? We determine a seller's market by knowing the dominant trend of the market. So, and since price has successfully come below the middle Bollinger Band, we now see it as a seller's market. So we need additional confirmation. We want to see price action move back to respect this zone. And obviously, as you can see, price went back, we got that rejection, and then we had some series of bearish candle. So I make my entry on this candle when I saw this seller's candle again, and of course I saw this rejection coming from this zone. I thought that there is a rejection here, this doji indecision. Then when I saw this bearish formation, I actually see this as a continuation, and that is how exactly I come into this trade and I make my trade entry. So it's as simple as that.